So, what if I told you that there's this hidden rule that pretty much governs success? A kind of secret law of imbalance, where just a tiny fraction of what you do, in your finances, in your work, even in your life, is responsible for almost everything that actually matters. It sounds kind of crazy, I know, but trust me, by the end of this, you are going to see it absolutely everywhere. All right, let's start where the numbers are the most honest, and maybe the most brutal: the stock market. Because it holds a secret that just seems to defy all logic. Think about the stock market for a second. You probably picture hundreds, maybe thousands of good companies all growing together, right? It's a nice thought. But what if it's not true? What if the huge majority of them were, well, basically duds? Well, the research is in, and the numbers are just staggering. A massive study looked at almost 100 years of market data and found that just 4% of publicly traded companies have accounted for all of the net wealth creation. 4%. And here's where it gets really wild. If you take that tiny 4% of superstar companies out of the picture, the other 96%, we're talking thousands and thousands of stocks, did pretty much nothing. Combined, their performance was no better than if you had just stashed your cash in the safest, most boring government T-bills. The vast majority of stocks just don't create any real wealth. So what in the world explains this kind of extreme imbalance? Well, it all comes down to a really powerful idea called the Pareto Principle. You probably know it as the 80-20 rule. And it basically says that in most things, around 80% of your results come from just 20% of your efforts. A vital few things are driving almost all of the outcomes. And listen, this isn't just some weird little quirk of the stock market. Nope. This is pretty much the fundamental operating system of our entire modern winner-take-all economy. You see, our brains are wired to think the world works like the curve on the left, a nice, neat bell curve where most things are just kind of average. But the reality, especially when money's involved, looks a lot more like the curve on the right. It's a power law world of crazy outliers where a tiny number of massive winners drag the whole average up, leaving almost everyone else way, way behind. And if you want to see this in its purest form, look no further than venture capital. I mean, here, the 80-20 rule is on steroids. It's more like 90-10. A tiny handful of superstar investments are expected to generate basically all of a fund's returns. It's why you see so much money pouring into just a few sectors, like AI. For a VC, one single unicorn investment doesn't just help the fund, it is the fund. Okay, but let's bring this down from the stratosphere of high-flying startups. This same principle applies directly to something every business deals with, its customers, but maybe not in the way you'd expect. Check this out. This is a concept called the whale curve, and it shows you where your profits really come from. And what it shows is incredible. Your top 20% of customers, your whales, they aren't just giving you 80% of your profits. In many businesses, they're responsible for something like 180% of the profits. Now, wait a second. How is that even possible? How can you have more than 100% of your profit? Well, it's possible because of this. The middle chunk of your customers, they're basically a wash. They don't make you money, but they don't lose you money either. But that bottom 20%, oh man, they are actively destroying your profits. They're so costly to serve that they eat up 80% of the value your best customers created. So think about that. You are literally paying to have some of your customers. Okay, so this rule runs markets, it runs businesses, but what about your own money? Let's bring this right into your personal finances. If you look at a typical household budget, the 80-20 rule is staring you right in the face. A massive chunk of your spending, usually about 80%, is eaten up by just 3 or 4 categories: your housing, your car, and your food. These are your financial, vital few. And this leads to such a critical point. So many of us waste our energy on the right side of this chart, the trivial many. Skipping a coffee, canceling a subscription, it feels productive, right? But the impact is tiny. The real levers, the game-changing moves, are all on the left. The big, sometimes scary decisions, like negotiating a raise or refinancing your mortgage. Focusing your energy there has an absolutely massive, outsized impact. So when you lay it all out like this, it seems kind of obvious. Which leads to the big question. If this is all so powerful and clear, why are we so bad at it? Why do we always get stuck on the small stuff? Let me tell you a quick story about a committee meeting. First item on the agenda, a $10 million nuclear power plant. It is incredibly complicated, it's abstract, it's full of technical jargon nobody really understands. The committee spends all of 5 minutes on it, and then they approve it. Next item on the agenda, a $350 bike shed for employees. Now, everyone understands a bike shed. They've got opinions on the paint color, the type of wood, the best place to put it. They end up arguing about this completely trivial topic for 45 minutes. And this funny little story has a name: Parkinson's law of triviality. It's also known as bike shedding. And what it means is our brains are naturally wired to focus on what's easy to grasp, not what's actually important. We'll argue about the bike shed all day because, frankly, the nuclear plant is just too big and intimidating to even think about. Okay, so now we know two things. Reality is skewed, and our brains are programmed to focus on the trivial. So, what do we do? How do we flip this around and turn it into a real advantage? It really comes down to a simple three-step game plan. First, you have to identify your vital few. Seriously, ask yourself, what are the 20% of my efforts at work that are getting me 80% of my positive reviews? What are the 2 or 3 financial moves that will change everything? Second, you have to eliminate or automate everything else. Be absolutely ruthless. And finally, step 3, you take all that time, all that energy, and all that money you just freed up, and you double down hard on the few things that truly matter. So here's the real secret, the big takeaway. Success isn't about fighting this imbalance. It's not about trying to make every task or every investment or every customer equal. That's a battle you will always lose. The goal is to see the imbalance, to accept that it's the way the world works, and then to weaponize it for your own benefit. And this idea, it goes way beyond just money and work. So I'll leave you with one final question to chew on. What is the 20% in your life? The people, the activities, the experiences that's creating 80% of your real happiness and fulfillment? And what would happen if you decided to double down on just that?